we're at the inflection point now. There'll be an order of magnitude more financial products built on top of digital assets soon. So it is very important that we...
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. Ladies and gentlemen, buckle up your seatbelts because as we end the year 2024, heading into 2025, these percentages that we saw this year were absolutely phenomenal. Don't get me wrong, but they are peanuts compared to what is coming for utility assets over the next consecutive couple of years. And in today's video breakdown, I'm going to do my due diligence to show you guys that they tell you these things in advance, that in the future, they are building out this infrastructure right now in such a way for them to, once regulatory clarity is in place, literally drag and drop over onto public blockchains, and that they will utilize public blockchains at scale. Okay. With that being said, if you all enjoy these video breakdowns, these deep dives, do me a favor, smash that thumbs up button and subscribe. We have a whole bunch of video clips from panel discussions that we're going to share with you guys today. We're going to be diving into this fundamental piece from the World Economic Forum. I just wanted to start off by telling you guys that these percentages, if they're getting you all excited, keep in mind that we still might face some turmoil in the beginning of 2025, and that's understandable considering the bullish year that we had in 2024. We have to understand that pullbacks are healthy, corrections are healthy, and if they come, and it is my personal opinion, not financial advice, to take advantage of those opportunities to scoop up more blue chip digital assets. I mean, look at this mantra, 7,260 freaking % on the year, and has gotten no mainstream media attention. We were talking about that in our private CYPRX community. Soy, 413% on the year, up significantly from our 55-cent buy-in areas, shot to over $4 this year. We have XRP, right, surpassing all the critic expectations of them saying that XRP was going to be at 50 cents for forever and that it's a stable coin, rallied over $2 this year. Ladies and gentlemen, these are peanuts compared to what is coming for these utility assets. I promise you this, okay? Now, when this is all going to unfold, I don't have a crystal ball, but you have to understand that these elite organizations, they tell you these things in advance, yet nobody pays attention to this type of content that I'm going to be creating for you guys today. So let's jump in. First, let's get started. We all know that they always kick off the year by telling us in advance things that they're going to do, things that are going to happen before they happen. January 2025 in Davos, Switzerland, everybody should be paying attention to the 8th annual Blockchain Central Davos event, right? Hosting Ripple, Hedera, many others, Zodiac Custody, Avalab, so on and so forth, okay? Now, we're going to be diving into this year, depending on when you're watching this video breakdown, last year's Davos event, listening to some of the panelists talk about this, okay? Now, reason why is because we're going to be jumping into this document that the World Economic Forum, or this fundamental piece from December 10th, 2024, titled How Tokenization is Transforming Global Finance and Investment. Tap in, ladies and gentlemen. They literally tell you this stuff in advance, okay? So check this out. One of the major financial discussions and the themes at the 2024 annual meeting, that was from this year, depending on when you're watching this last year, was how physical and financial assets can be tokenized. Do you guys remember some of the things that they said at this meeting? This is the Davos 2024 meeting. This is the panel discussion that Brad Garlinghouse himself from Ripple was involved in. We're just going to play a couple of video clips real fast, looking back at the beginning of this year and what they said, because this is monumental. And this document that is updated from December 10th, 2024, is going to go hand in hand with a panel discussion that just dropped only a month ago, and as individual representatives sitting on stage from JP Morgan and other large institutions talking about openly that they are literally building out this infrastructure in order for them to drag and drop onto public blockchains when the regulatory green light comes into fruition. You cannot make this stuff up. I'm telling you guys, you do not want to miss today's video breakdown. All right. So let's just listen to some of the events, some of the panel discussions, from the event that took place at the beginning of Davos 2024 before we read and digest the rest of this fundamental piece from the World Economic Forum. Take a second and just listen to a couple of these video clips here.
The first philosophy was to move fast, break things, and apologize later. You know, those Binance and FTX, and it's proven that it's a wrong strategy, and they're no longer here today. Right? And then there's a second path that we take things a bit slower. We manage to balance demand of different stakeholders. Be compliant from day one, and I think the whole world is shifting towards this second strategy, towards running a proper infrastructure in a compliant way. And it suits the next wave too. I would like to add further from Brad and Michael that the next wave would be probably driven by institutional money, which is like real serious money entering the space, not just retail customers. And as a prerequisite of those institutional funds, they cannot invest in something illegal or invest in infrastructure that are not well with good operations or security.
It suggests that the public is getting a little more sophisticated about understanding that, the whole they're all criminals. Like, no, there's some criminals and we know who they are, and everybody else is just trying to create a new financial system. So that seems like an encouraging sign. So that seems like an encouraging sign.
So I'm sure there'll be new innovations happening soon. That was my first point. And my second point is that ETFs is acting as a catalyst. We're at the inflection point now. There'll be an order of magnitude more financial products built on top of digital assets soon.
So you guys heard all of those video clips. Let's keep the momentum rolling because that is going to go hand in hand. They talked about how the next cycle will be driven by financial organizations. They talked about creating a new financial system. I mean, literally word for word, you cannot make that stuff up. And they also mentioned that we are on the cusp of witnessing an order of magnitude, that we are in an inflection point that we have never experienced before. You need to pay attention to detail, and that's why I'm trying to show you guys this, because again, they tell you this stuff in advance. Keep in mind that that was from the beginning of this year, again, depending on when you're watching this video, last year's Davos event. And I just showed you guys how yet again, they have another Davos event at the beginning of the year. XRP this year traded above $2. We had major other utility assets trade well above their previous all-time highs, breaking into brand new all-time highs, up hundreds of percentages, okay? What I'm about to show you, we are literally just getting started, and they're telling you this openly in their documents, yet no mainstream fundamental coverage is going to talk about this. So it says here, to continue this fundamental piece, meaning that a digital representation of these assets is created on the blockchain to allow them to be exchanged securely in real time. Now, after years of investment, proof of concept, and testing, this is important right here, the planets are aligning, and tokenization of financial assets is finally happening at an institutional and governmental level. This shift will forever change the way that nations trade and promote more inclusive financial participations. Wake up, people. The every average day person does not know that this is happening. You are at the forefront of this, and you need to take responsibility and tap in. Okay? Tap in. Share this information with your friends, with your family members. It's literally crazy that they openly tell you this in their documents. Okay? Check this out. The need for shortened settlement cycles, which improve liquidity, enhance market efficiency, and lower systemic risk, and the demand for 24/7 market operations will require a new infrastructural backbone. Did you not just hear the gentleman say that they are building out a new financial system? And that was from the beginning of the last year's Davos event. Furthermore, by using distributed ledger technology for collateral management, financial institutions can free up substantial capital estimated at more than $100 billion annually. That's a peanut-sized number right there. Okay. If we continue on with the rest of this fundamental piece, it goes on to say, meanwhile, the institutional crypto sector is adopting traditional financial practices to mitigate risks and improve yields on tokenized assets. There is a rising demand for secure private transactions in crypto markets, where data permissioning is critical to protect trading strategies and scale investment flows. As we enter 2025, we are at an inflection point. Oh, where? Well, I'm telling you guys, they don't say this terminology over and over again for no reason. You heard it from the Davos event.
We're at the inflection point now. There'll be an order of magnitude more financial products built on top of digital assets soon.
Okay, well, let's check this out.
When we talk about blockchain, there's always this, question that keeps coming up of when is mass adoption here? When are we going to sort of cross this proverbial chasm of mainstream use cases? And the real answer is that it's not going to be a point in time, and it's not going to feel obvious. Instead, I think we're at that point already.
Right? We're at that point already. This system will start to come together and synchronize transactions that bring tokenized securities and deposits into seamless capital flows, connecting global markets in ways unbound by traditional financial cutoff times. This is, again, the document from the World Economic Forum. Last but not least, it says, we are in the period of adoption where connectivity and digital assets are finding liquidity and scale. This progress will create the mechanics for digitally native global economic networks. The benefits of tokenization in capital markets will increase exponentially as more institutions and infrastructures see the advantages for themselves. The exploratory phase is over, ladies and gentlemen. Do you see that right there? They literally tell you that it's done. Their proof of concept phase, their testing phase, we are literally on the forefront of them, quote unquote, flipping the switch over the next year to 2 years. We are right there on the edge. Real world applications of tokenization are here and will deliver a seismic shift in how our capital markets will operate, connecting people and institutions across border and improving the flows of money and create systems that are fairer, more efficient, and more resilient. Again, this is from the World Economic Forum, straight from them. They don't hide this stuff. December 10th, 2024. Okay. Now let's head over to this panel discussion that took place. And we're going to just listen to a couple of different panelists talk. Now, I just want to show you guys who's on stage. I don't know if you can see the names in the back, but just to show you who's talking. These are literally representatives from global elite organizations sitting on stage. You have individual representatives from JP Morgan, an individual representative from Societe Generale. You also have an individual representative from Cadena. If you don't know who Cadena is, well, just go over to their website. You can see right here their experience. Look at this. Stems from leadership and hails from some of the largest and most influential blockchain and tech financial institutions in the world. You got the Securities and Exchange Commission. You got JP Morgan, Wells Fargo, and Microsoft there, State Street listed. All right. That's who's speaking on this panel discussion right here. So I highly suggest you guys pick up bits and pieces of the puzzle that they are laying down for you all. They do not hide this. This is, again, from a panel discussion from 1 month ago and only has 1,000 views. So let's take a second and listen to what they talk about, how banks are looking at using public blockchains and that they are building out systems so that they can move over to public blockchains when the regulatory clarity allows for it.
Well, to me, the hoodie is technically the technology, right? And so you had entrepreneurs and technologists that they created this $2.5 trillion industry, financial system, but they did it without the help of the suits of us that have experience. I'm a former traditional finance person as well, that have the experience understanding regulation, securities, that sort of thing. And I think everyone needs to work together. Now, on the question of public to private, which is what this is about, when we speak to the banks, I think you'll find out there's a lot of regulation in this space, and the banks are the most heavily regulated, that when they're looking at actually working with this technology, most of them are working with private chains. So information's not out there. They're much more protected. Private chains, depending on how you look at it, could be like a very large centralized database because they don't have the decentralization that public chains do. But banks are actually looking at, and asset managers. Asset managers have done public chains, but that's different. We'll get into purposes later. But the banks are actually, from what I hear, really looking at public chains because the future, I believe, is public.
Yeah, I think you would put decentralized and public on one extreme and then private and permissioned on the other, and there's iterations of each. With JP Morgan and WisdomTree and Avalanche and some others, last year we worked on something called Project Guardian, which was a private and permissioned instance of the public blockchain of Provenance. So that was a bit of a hybrid. And the beauty of working on something like that is JP Morgan ran their own nodes, meaning they controlled the network. They didn't worry about a distributed network. They actually controlled their own network, which means they controlled the tokenization, which means they controlled the fees and permissioning. So it was essentially as locked down as a centralized database. But the beauty of building in Provenance, for instance, is you can, with a touch of a button, you can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to. So you can, with a touch of a button, you can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to.
So, and for us, we do see a future where a public blockchain fully realizes its potential. And so the way that we look at the world is like, let's build use cases today using this technology, using Solidity, which is Ethereum's programming language. And from time to time, we do these experiments where we can deploy what we've built onto public blockchains to ensure that we're doing it in a way that should the time come where we eventually want to migrate, we can do so in a pretty smooth manner. And so that's kind of our approach.
All financial services networks, whether it's credit cards or custody banks or my old business depository banks, you have an oligopoly of providers inevitably evolves due to regulatory and compliance and interoperability. So think about Visa, MasterCard, or BNY Mellon and Northern Trust and State Street and custody. I think we're going to wind up with a very small number of public blockchains that register, ledger, and exchange the world's financial assets. And when I say register, ledger, and exchange, it's important to think about that because the credit card networks are messaging networks. SWIFT is a messaging network. DTC is a settlement network, right? So mapping all these things. Blockchains can do custodians or sort of layer 2s and layer 3s. And if you think about TradFi, you have the credit card networks, you have the issuing banks and brokers, you have the custodians, you have the DTCs. Those are all layers of a network. But most public blockchains, if constructed in the right way, they can encompass all those functions at the layer 1 blockchain level.
I think Swift will always be here. Swift is just a messaging system. It doesn't transfer anything. But anytime you've got a payment to settle an asset transaction or whatever, you need a Swift you need it involves a SWIFT message. I used to work at the Bank of Canada on the foreign exchange desk. You live and breathe SWIFT. The only thing I can see on the horizons, you've got, say, Ripple has a competing project called RippleNet that might be a competitor, but
I think we're going to wind up with a very small number of public blockchains that register, ledger, and exchange the world's financial assets. And
so you heard that gentleman talk about and mention how public blockchains can facilitate these new financial rails, and how a few public blockchains will, in the near term future, at least from his perspective, facilitate the same exact roles that these intermediaries today facilitate. That is why I'm trying to get you guys to see, again, not only do they tell you all this stuff publicly, but that these percentage increases on the utility assets that we saw this year are absolutely peanuts compared to what is coming over the next consecutive couple of years. Do not lose sight, right? Do not be shaken out in case we see another market correction in 2025 or a deeper pullback. Understand the long-term perspective and understand that at events like the World Davos event, they tell you these things in advance. They tell you these things in their documents to clear their negative karmic energy. They tell you these things in advance so that they can sleep well at night knowing that we warned you all right? And it is up to us as the general retail public to catch on to bits and pieces of the crumbs that they lay down for us. All right. Many blessings to you guys. As always, none of this is financial advice. Always do your own research. But again, showing you guys information and news that the mainstream will never cover. Do us a favor, if you enjoyed, smash that thumbs up button, subscribe to the platform, share our YouTube page with your friends, with your family members, non-biased, good research, good information that is going to enlighten you all on what is truly happening behind the scenes that is not getting any mainstream attention. With that being said, as always, be cognizant, be aware out there. If you're not subscribed, make sure that you're subscribed before you head off the platform. Again, do me a favor, smash that thumbs up button. It does help boost the algorithm, and I'll see you guys in the next video breakdown.
Blockchain that isn't interoperable with a public blockchain at some point in time, because you'll have to stop what you're doing and then rebuild in the public blockchain. I think we all do agree that once the regulatory environment catches up to the technology, and regulation is always behind technology, it's just, it will never catch up. It's not supposed to catch up. The future is certainly public blockchain.